Hello and welcome to Business Incorporated. I am BC at Debayo. Coming up today, the World Bank pledges $12 billion to aid countries struggling with COVID-19 outbreak. And coronavirus forces IMF and World Bank to switch to virtual spring meetings. Plus, African Airlines report losses of $400 million since COVID-19 outbreak. Let's begin the show with intraday numbers from major markets in Africa, which were mostly positive at intraday. In Nigeria, the NSE gained the most by 0.28%, while South Africa's GSA index was up 0.1%. However, the EGX30 in Egypt declined 1.76% at intraday. Kenya closed positive on Tuesday. In the Middle East, markets in the United Arab Emirates led the losses at intraday. The Abu Dhabi index shed 2.84%, while the market in Dubai lost 2.24%. In Saudi Arabia, the index was down 0.59%, while Qatar's index trimmed 0.13% at intraday. Now let's go to the UK now. Coronavirus continues to dominate the headlines after the US Central Bank made a surprise cut in interest rates on Tuesday. Well, let's see how that is playing out at intraday in London with my colleague Juliana Olayinka, who joins us from our London studio. Good afternoon, Juliana. Now, the Fed is the latest central bank to cut rates to mitigate the impact of COVID-19. What body language or sound bites are you getting regarding the possibility of the Bank of England cutting the rates?
In your opening piece there were some surprises that the US Fed Reserve did cut their interest rates, even though we have been hearing from central bank governors across the globe that that's exactly what they were going to do. Now, a lot of economists here have put the predictions that the Bank of England will cut basis points by 25 BP by March the 26th to about 80%. So there's an 80% likelihood that it would happen. We heard, of course, from the outgoing Bank of England Governor Mark Carney yesterday. He did say that he is expecting, if COVID-19 goes away, it has been going, that there will be a shock to the economy, and the UK can expect some sort of stimulus package. The first one we're expecting is likely to come next week, Wednesday, when the Chancellor of the Exchequer does deliver his spring budget. Right as we speak, PMQs is going on at the moment, and Prime Minister Boris Johnson is dishing out some of these measures to the House of Commons today. Also as well, Andrew Bailey, he is Mark Carney's successor. He will be the new Bank of England governor, taking that first Monetary Policy Committee meeting on the 26th of March. So once he speaks today, who knows? Perhaps that will raise the stakes higher, or it could indeed put the stakes lower.
Fingers crossed. Now, Legal & General, Britain's biggest manager of pension assets, has put out solid results this morning and says it will pay staff sick pay who have to self-isolate due to the coronavirus. What other companies are taking this measure?
Well, at the moment, there aren't any other companies that have announced publicly besides Legal & General. But, you know, if you have a staff member here in the UK, then by employment law, you have to pay them to be sick. Just as I came into the studio this year, I did hear Prime Minister Boris Johnson announce that the statutory pay, which you must legally give your employer if they're off by 4 days, well, the government gives it to the employer. So it's separate from your personal employer. So that has been shifted from 4 days to the first day. So if you're sick and you earn over £118 a week, then the government will be giving you money to stay at home. The issue we have in Britain at the moment, and what seems to be dominating lots of headlines, are people that work in the gig economy. Now, the gig economy are people that can switch on and switch off. If you go to work, you earn. If you don't work, you don't earn. There are about 2 million or so people who are in that sort of status, and a lot of trade unions are completely worried because, of course, if you can't earn any money, that's not good for your rent, for your mortgage. And they're saying to the government that there needs to be some emergency measures for these people so they don't lie about their symptoms, get to work, drive in their Uber and infect other people. So this is an ongoing discussion in the UK at the moment.
Now, bring us up to speed with market updates at intraday and their major drivers.
Well, at intraday, the FTSE All Share is up by 1.19%, the FTSE 100 is up by 1.41%, and the FTSE 250 is up by 0.56%. In currencies, the pound is down on the dollar by 0.27%, up against the euro by 0.03%, and up on the Japanese yen by 0.13%. Of course, as soon as the US Federal Reserve cut interest rates, the dollar was up against the pound, so the pound was worth about $1.27 at one point yesterday, which was a 4.5-month low. They're still recovering from that. And also as well, basically, we got those PMI data figures from the service sector. Now, the service sector is Britain's most important sector. That was down, still way above the 50 mark, 50 meaning that the sector is enjoying some level of growth. That was down to 53.2 from 53.9 in January, which really did affect the pound. But the FTSE is up today, and it seems that supermarkets are among the big risers. Sainsbury's and Ocado are up 2%. Morrison's are up 3%, and that's because there's a lot of panic buying at the moment. Toilet roll and antibacterial gel seems to be going completely off the shelves, and that's helped tip up the FTSE today.
And that's the exact same thing that's happening here in Nigeria. Many thanks, Juliana. We'll see you again later.
Thank you.
All right, we move to Asia, where stocks were mostly higher today after the U.S. Federal Reserve announced an emergency rate cut on Tuesday. South Korea's Kospi led gains among major Asian markets, jumping 2.24% at 2,059.33. Mainland Chinese stocks were also higher in the day. The Shanghai Composite added 0.63% to about 3,011.67, while the Shenzhen Composite gained 0.36% to approximately 1,895.74. Hong Kong's Hang Seng Index edged 0.22% higher as at the final hour of trading. In Japan, the Nikkei 225 closed fractionally higher at 21,100.06, while the Topix Index ended its trading day 0.17% lower at 1,502.50. Meanwhile, stocks in Australia declined, with the ASX 200 closing 1.71% lower at 6,325.4. All right, in Europe now, the markets traded slightly higher today following the U.S. Federal Reserve surprise rate cut on Tuesday. Now, let's talk to my colleague, Orich Batts, for more from the European scene. Good afternoon, Orich. It's good to see you finally. Now, the Fed surprised markets with half-a-point rate cut yesterday, but the attempt at calming the markets backfired, at least yesterday. We saw big losses on Wall Street yesterday and, of course, a tepid reaction in Asia this morning. How are European markets digesting that move by the Fed?
Yes, they're creeping up slowly at first, and now they're clearly in the green zone. Across Europe, shares are gaining at least by 1.5%. Here in Frankfurt, that's the case. In Paris and in Milan, a little bit more than 1.5%. In London, is doing the best with about 2%. But still, there are lots of investors, analysts, I talked to traders who were not only surprised by the Fed's quite clear move to go down half a point with the leading rates there, but also they're dissatisfied. And some are saying it's a misguided policy. You can't meet a demand weakness, a supply weakness with instruments from the Fed, from a central bank that are not really geared to addressing that. One important investor, the head of fixed income at Allianz, Europe's largest insurer, was very critical. He said that the intervention of central banks at this stage is useless, even unhealthy. Supply shock is complex, but it is not a rate cut that will be able to remedy it. And the Fed is burning ammunition that it may not have now in case of a severe recession.
So far, the Bank of England and the ECB have not acted. What are people in the markets where you are expecting them to do?
Well, they're expecting them to act soon. The Bank of England, we haven't heard, but the ECB, like the head of the Bank of England, the president of the ECB, Christine Lagarde, said that it was ready to act with targeted and appropriate action. Now, that can be interpreted. We hear from insiders that the ECB is ready to move when it sees evidence that small and medium-sized companies need cash injections. That's the kind of help it would give. We hear nothing official there, but we hear it won't be moving to rate cuts or up-stepped bond buying. It's already buying a lot of additional material. The market there is not all that rich anymore in bonds that the ECB or others, for that matter, could buy. But let's say injecting cash into companies that are struggling because of coronavirus now or in the future, it sounds more like economic than monetary policy.
Well, there's been a lot of focus on the big losers in the coronavirus crisis. The amount of market capitalization lost in the past few days due to the virus is staggering, and companies are also suffering lost revenues. Well, yet there are some who profited or stand to gain from this. Can you tell us about these companies?
Yes, I have a few examples. The Deutsche Börse, for example, the German stock exchange, which operates the Frankfurt exchange right here where I'm standing. The volume was huge in the past few days, and the Deutsche Börse itself reported that volume was up by 60% in the month of February. And I already thought as much when I saw the traders who were really working hard last week. I hardly had time for an aside for a quick chat, and they said that the volume was huge, that they really had to work to get at it. An maker of antiviral drugs, Gilead Sciences, for example, that share went up since the end of January by 30%. The Chinese authorities have green-lighted clinical trials of the company's antiviral drug. And if you ask me, taking the cake is a maker of face masks. It's called Alpha Pro Tech. The Surgeon General in the United States has warned about people, who are not necessarily health professionals of buying face masks, but they're going like hotcakes. And this firm is profiting so much that the share almost quadrupled till it came back down a little bit again. But it's still doing way better than before this crisis. So there are winners as well as the losers.
As expected, Ulrich, many thanks for these updates. We'll see you again tomorrow. And in the U.S. stock index, futures pointed to a higher open today. Earlier on, the Dow Jones Industrial Average futures indicated a pop of about 420 points at the open, while futures on the S&P and NASDAQ also pointed to opening gains. Former Vice President Joe Biden's success early into Super Tuesday voting appeared to buoy U.S. equity futures as the former VP notched a flurry of victories in key southern states, including Virginia, North Carolina, and Arkansas. Biden's performance also appeared to boost stocks of healthcare companies, one of the largest health insurance in the United States, and whose equity is sometimes viewed as a bellwether during a political debate around the industry. And oil prices jumped 1.5% today on hopes that major producers have made progress towards sealing an agreement to implement deeper output cuts aimed at offsetting the slump in demand caused by the global coronavirus outbreak. Brent crude rose 1.5% to $52.64 a barrel, while U.S. West Texas Intermediate futures rose by 1.53% to $47.90 a barrel. A panel of the Organization of Petroleum Exporting Countries and its allies recommended cutting oil outputs by an extra 1 million barrels per day on Tuesday. The recommendation may mean that Russia and Saudi Arabia, the two biggest producers in the OPEC Plus group, are close to a deal to support prices. And gold prices rose today as well, extending gains from a 3% rise in the previous session as the U.S. Federal Reserve slashed its benchmark interest rate to cushion the economic impact from the fast-spreading coronavirus. Spot gold climbed 0.3% to $1,643.76 an ounce, and U.S. gold futures gained 0.1% to $1,645.30. Among other precious metals now, palladium fell 0.7% to $2,484.64 an ounce, and platinum was up 0.9% at $882.50, while silver rose 0.2% to $17.21 an ounce. We'll look at trading activities at the Nigerian Stock Exchange when we return in just a moment. Please stay with us. Welcome back. The World Bank has committed $12 billion to assist countries struggling with the coronavirus outbreak. The World Bank President David Malpass says the poorest and most at-risk countries will be prioritized in the distribution of the aid. The emergency package includes low-cost loans, grants and technical assistance to help countries improve their public health response to the crisis, as well as work with the private sector to reduce the economic impact of the virus. This comes as leaders around the world pledge to shield their countries from the economic impact of the outbreak. Meanwhile, the International Monetary Fund and the World Bank will not be convening in person in Washington for their spring. Instead, the meetings will be held in a virtual format. The institution's spring meeting, scheduled for April the 17th to the 19th, usually attracts about 10,000 government officials, business people, civil society representatives, and journalists from across the globe to a tightly packed two-block area of downtown Washington. Officials say the IMF will still release an updated world economic forecast that will likely include a downgrade of its global outlook due to the outbreak of the coronavirus, which has taken a heavy toll on air travel, manufacturing and tourism around the globe. Of course, the International Air Transport Association says African airlines have lost $400 million since the outbreak of the coronavirus in China. The losses come from suspended and cancelled flights en routes to China, as airlines including South African Airways, Royal Air Maroc, Air Tanzania and Kenya Airways have all suspended flights. However, the continent's largest airline, Ethiopian Airlines, is still operating flights to and from 5 cities in China. The vice president of the IATA says the impact of the disease will only get worse for African airlines, which last year posted losses of $100 million. Well, let's cross over now to the Nigerian Stock Exchange, where Temple Ashajo is standing by to give us updates on today's trading activities so far. Good afternoon, Temple. At intraday, we saw the market up 0.28% as the positive sentiment changed at this time.
No, it's still been maintained. We're seeing the momentum sustained at the markets. We're up some 0.55% at about this time. The banking stocks are still the major drivers, just as they did yesterday, and a couple of the consumer goods stocks which have actually really lost some weight before now, but they've regained all of those losses at this point, and that's the sentiment we're seeing in the market. It's positive. The only area where we are seeing less appetite rather should be the oil and gas segment, and of course the industrial goods side of the market, even though we know that Boa Cements that made some losses yesterday experienced a bit of recovery today, but the recovery cannot match the level of losses that we saw yesterday in the market. So at this point, things are looking quite all right. Investors are betting more on the shares of FBN Holdings because, again, this is a bank that is likely to be releasing its numbers any moment from now. That's the earnings for the year ended 2019. They had actually performed very excellently last year, given the fact that they were able to clean up their books. They reduced their NPL ratio all the way from 25% down to around 14 to 13% eventually. So folks are looking to be able to buy because of the possibility of dividends that will be declared or proposed by the board, which is meeting very soon. They've also announced the close period. It is something that is now guiding investors in terms of how much of that shares they should accumulate or how much should eventually be reduced. As we speak, the top trades in the market shows that they've done some 42 million units of the volume that we've seen in the market. That's of the entire close to 300 million units of shares that have been traded so far. We also know that this afternoon, Lafarge, which is WAPCO PLC, will be visiting the floor of the trading floor of the Nigerian Stock Exchange. They are the ones that the traders here are currently waiting for. Any moment from now, they will hit the trading floor to pass on some information to the trading community here, the traders here on the floor of the stock exchange. And we all know that they are one way or the other, directly connected to the index case of coronavirus that we have currently in Lagos. We understand that some 110 individuals have been quarantined because of the index case, which of course shows that the Italian who came in from Milan had one meeting with the top executives of this particular company. So coming to the floor this afternoon will afford them the opportunity to address all of the concerns around this, because again, the plant of this company has actually been shut down. They haven't been in production, and that indirectly has, affected the share price of this particular company. As we speak, they are down some 45%, some 45 basis points. We've seen some more than 7 million units of the shares traded negatively. It is trading at some 13 naira 50 kobo, 13 naira 20 kobo to 13 naira 50 kobo. The value of the entire transaction we've seen today alone on this particular company is around 100 million naira. That is a whopping 45 basis points representation by way of impact on the share price of WAPCO, which is Lafarge PLC, BC.
Temple, thanks for the updates, and we'll see what direction the market will face at the end of the day. And the International Monetary Fund says it's in broad agreement with the Kenyan government on the main aspects of a fiscal deficit reduction plan. According to the IMF, the plan could culminate in the deficit dropping to below 4%. The Finance Ministry plans to set a budget deficit of 4.9% of the GDP in fiscal year to June 2021, down from 6.3% this financial year. Kenya's fiscal deficit, which peaked at 9.1% of GDP in the 2016-2017 financial year, has been partly driven by higher spending on infrastructure projects, including a new railway financed by China. Meantime, private sector activity in Kenya fell further in February as orders for new goods dropped for the first time in more than 2 years as imports from China tumbled due to the coronavirus outbreak. The market's Stanbic Bank Kenya Purchasing Managers Index for manufacturing and services fell to 49.0 in February from 49.7 in January. The Finance Ministry says economic growth probably slowed to 5.6% last year, compared with the government's initial estimate of about 6%. The ministry expects growth of 6.1% this year, while the central bank forecasts a growth of 6.2%. Meanwhile, private sector activity in South Africa remained in contraction in February as businesses cut jobs due to weak demand and rising costs as the coronavirus outbreak in China stalled trade between the two countries. IHS Markit's Purchasing Managers Index edged up marginally to 48.4 from 48.3 in January, but still below the 50 level that separates expansion from contraction. The unemployment sub-index registered a fourth consecutive month of contraction to 46.7 in February from 48.3 in January, the fastest drop in employment since the reading began in July 2011. And that's where we wrap up today's show. Thank you for watching. I am BC Adebayo.